All right, guys. So I just want to talk about JASMY here. Down 94%. If we look at this right now, it was down 94%. Now the very lows were slightly more, 94.5%, but it's pretty close down into that area, but it's 94% down. Um, the past history has showed us that coins um, can go down to 98% down. Now, Binance, the history on Binance has showed that coins that have never had a bull market usually will have some sort of bull market at some point. Okay, so and some of those coins, there's many coins like ADA, CRV, Algo, BZRX. Um, there's more now. I can't think of them, but there's a lot more. They all drop to 97 or even 98% down before recovering. I think FET was another one. And all these coins are the coins, the ones that drop down 98%, were the coins then, and later in the bull market, that done the largest percentage gainers. So history has kind of told us that if you had bought down at 97, 98% down, then you are in with a shout of making the largest percentage gainers. Is this time different? Is the fact that we are at war, the fact that the stock market might be topping out, the fact that the Fed might stop printing money, highest inflation in 40 years, all that sort of stuff. Is things different now, and are these coins going to drop off and die, or is this another gift to make a lot of money? Well, the unfortunate truth is that we likely do not know for sure. We have to just play the game, try and put the probabilities in our favor. And the probabilities are saying that this is now down 94%, and the fact that, well, 97 and 98% are the preferred area to be averaging into. But the problem is there has been another 50 coins that only made it to 94, 95% down area, 93, 94, 95% down. They never made it down to those lower ranges of 97, 98%. So the thing is, you kind of need to start accumulating. Well, not that you need to, but if you want to make sure you're involved, then you need to start averaging in down here at 94% and right down as far as 98%. So that gives us here on JASMY a 66% maximum drawdown in theory. So what I have kind of been thinking in my head was, to have a maximum amount that you want to deploy into averaging down into these lows, for example, and I'll just use $10,000 here for this. So what my thought process is that if you had $10,000, you could only use 5,000 of that for averaging into. So you could start here, and I mean, you could put $1,000 here, and if it drops, put another 1,000. If it drops more, keep going, and until you have your 5,000 deployed, right down as far as 98%. And if it does get down to 98%, then what you do is you take the other 5,000 and you deploy that 5,000 right down here at 98% down, because history has showed that that would be the maximum area that coins like to go down. So having that lump sum at the very end would drop your average right down. So just for example, because we don't know where the low is going to be. So if you had averaged in $1,000 the whole way, every certain percentage here, the whole way down, you're going to have an average of, in theory, in and around the center point. Right, in and around the center point. But if you have then another $5,000 to deploy, or even $6,000, if you only had 4 buys and then you had $6,000, well, your average is going to be dropped right down, to the center point, or even slightly below that center point. Okay, you're going to be able to bring your average down quite a bit. Now, I'm not saying that you're going to get the exact low. It's not going to get you the exact low in theory, unless you have maybe $10,000 or $15,000 to be deploying at the 98% lows, unless you want to bump up your numbers that you're willing to deploy at the very low. Like if we get to 98%, that's the only way you're going to get your average right down. But in theory, you could by doing something like this, you could end up getting an average down of 96, 97%. That's with that initial $10,000 investment, for example. It could be a $100 investment. It could be a $100,000 investment. Everybody's going to be different. I'm just throwing out numbers, easy numbers to work with here. But the other thing to consider is that the 97 and 98% down, when you're right down here, the price does not stay down there for long. So you're never going to be in theory, you're not going to be in serious drawdown down here for too long. And now this is just another example. I was just looking through charts. Coins that dropped really hard in the past. Now, I want to talk about a couple of other things as well. But when this was down 94%, like JASMY, so JASMY is down 94%, somewhere there. I just want to fix that a little bit because it's just to make it more accurate. Okay. When this was down 94%, you can see that it was not the low, of course. And CRV did continue to drop another 48% before bottoming out right at the lows. Now, if I just zoom that out a little bit, you can see that the very bottoming price, you do not have like a lot of time that you're in max drawdown or whatever. Price came back over here. Look at it. It came back to test it. It came back to stop everybody out right down in here in this little bottoming box. Now the problem is you don't fully know if you're going to even get into that bottoming box, like in JASMY. Of course, when you do get down to 98% down, you can maybe take more risk and be willing to start loading up on it. But the problem is you don't know if we're going to actually get down into that area. But if you could somehow just get your average down here as low as possible, there's a couple of things to consider. Well, say your average was there, for example. This CRV will only bounce to 100% from up here, from the very lows, and you're not going to get your average. In the very lows was 200%. But from up here was a 100. We'll call it a 100% bounce. Of course, that was the lows, and we ended up going way, way, way higher. One thing I want to point out here is when the white 100 on the 12-hour chart starts to compress, you can kind of see it compressing in here, but it only starts to compress because you get this spike. And the problem is sometimes when you get this spike, it doesn't drop back down. This on CRV was a complete gift. A lot of times you get that spike up and it never kind of gives you the second opportunity to be buying on the lows. But you can see when this compression was happening, when these moving averages started to get a lot more tight, that's also when you could be buying and adding. JASMY doesn't really have that compression yet. That compression comes with a base. And when you get a base like that, these moving averages start to compress. And also when you get them spikes, that spike causes the moving average to compress and start to round out. Anyway, I just wanted to give some of my thoughts and some of my thought process in what I'm thinking of doing is trying to average in, but obviously you want to get this low average if the market is going to give it to us. The last thing I would just want to say here is overall, I wanted to buy below this 3-day volume right down below here, but sometimes you don't get that. Sometimes a large volume is the exact low and then it moves back up. The theory behind the large volume is that the safer buy can be down below that, but sometimes you do not get it. My preference is to accumulate below here, but there may be a chance of missing out if that doesn't happen.